Okay, in this video, I'll be showing you how to identify and trade the advanced Cypher pattern in just 4 simple steps, similar to how we did the Gartley and the Bat. Okay, just 4 simple steps. But first, I just want to say a couple of things before we get into breaking it down. This is absolutely my favorite pattern to trade. You probably hear me ranting and raving and talking about it when you see me trading live, or maybe even some of my other videos. I just love the Cypher pattern. I'll pretty much take it every time that it comes, 10 times out of 10. Okay, unless there's some extreme case in which I won't, which is rare, I'm pretty much going to take it. One of the reasons is because it has or boasts the highest success rate of all the patterns. So it's going to be up there in that 70 percentile success rate, like Gartley, the same way that H.M. Gartley said in his book about the Gartley pattern. He's the founder of it. And he said that through his back testing of 30 years, that it won 7 out of 10 times. And we can expect the same type of action here on the Cypher pattern. When you see how it reacted, that's pretty beautiful. Okay, so absolutely love it. Another great thing about it is they are very, very frequent. Sometimes these things come back to back, sometimes back to back to back, and hopefully I'll be able to display some of that. Okay, so not only that, how efficient it is too, because although the D leg is hanging a little high, not like Gartley and Bat where the D leg is hanging kind of low, but that same thing, even though it affects your risk versus reward because it has more space to draw down, it's also giving it more space to breathe as it's getting ready to react and do its thing. So that's going to lead to the success rate because it has more room to come down here and play around, maybe even consolidate a little before it takes off. As you see, he came downfield, consolidate, move around a little bit, and then he was off to the races, got a high little bit of correction outside return, and then off to the races. So that's a good thing about it is even though you got space to draw down, and if you do get in a drawdown, it's going to make you nervous, but that space is needed so it can do its thing. So those things being said, let's just move up to a blank chart and let's start to break it down. So step one, as with the rest of the advanced patterns, is to identify the impulse leg. Okay, I'll say identify impulse leg. And that's your X to A leg or X to A move. Okay, identify your impulse leg. Very, very simple. Okay, because that's going to stick out like a sore thumb. Okay, so let's just go ahead and put that back. X, A. All right, cool. Step number 2, okay, is your A to B move. Okay, A to B move, which is going to help you validate B. Okay, so let's write that part out. B leg is valid with a 382 retracement of X to A. Okay, so X to A, B leg is valid. B leg is valid if there's a 382 retracement of X to A. Okay, must touch the 382. I should have written that out. So grabbing our Fibonacci retracement tool and measuring from X to A, okay, that retracement for a valid B must, let me go ahead and add that to this, must touch the 382, can go as far as 618, but cannot close beyond 618. Okay, so for your valid B, must touch the 382, and the same thing I was telling you guys about the rest of the patterns. You don't want to invalidate your patterns. You don't want to trade invalid patterns. You don't want to try to break the rules because different things start to happen. Like if you don't have a cipher, you just don't have a cipher. You'll be trying to trade something else and the market's going to react to what it actually is. So if the rule states it must touch the 382, and your price action did not touch the 382, do not continue to write out your Cypher pattern. I'm talking about after you get used to these rules of engagement. Just don't break the rules. Trust me, it'll help you in the long run. And for the 618 part of it, it can touch the 618 but cannot close beyond it, right? Let's say a candle came and closed beyond 618. You don't want that. That's invalid. Okay, so you want to try to avoid and stay away from invalid patterns. But for the sake of that, we'll call that a valid B leg. Okay, so identify impulse leg. Okay, step number 2 is your A to B move. Validate that you got a good B leg where it must touch the 382. Pretty much going to get that a lot of times. You'll see that 382 because 382 and 618 are a major Fibonacci ratio. So price action is pretty much always going to suck down into those. That's just the way the market works. Okay. Then you see price action coming up. So the next move is your B to C move. B to C move. Okay. Requires a 127 extension of X to A. Can go as far as 1414, but cannot close beyond 1414. Okay, so you see price action coming up, right? You see price action coming up. Oh, another thing is Cipher is different. Cipher is the only pattern where C must be above A, but at 127% of X to A, it's going to. But the other patterns, so Gartley, for a valid C leg on Gartley, it required a 618 retracement of A to B for Gartley. BAT required a 382 retracement of A to B for a valid C leg on BAT. But the Cipher C leg, okay, C leg is valid if you get that 127 extension of X to A. So we'll grab the Fibonacci extension tool and we'll measure from X to A. Come back, of course. And it must touch the 127, okay? Like you see, it can go as high as the 1414, but cannot close. A candle cannot close beyond 1414. And what that means is if there was a candle that closed beyond that, that's invalid. Throw it away, leave it alone. Do not try to force a Cipher pattern with an invalid C leg. The C leg is the most important part. It's the most important leg of the Cipher pattern. So you don't want to try to move forward if your candle. I know you're going to want it to happen, but remember, you don't have to do that because another one's coming around the block anyway. And you will soon see that for yourself. Okay, so that's the valid C leg. Okay, and that's your B to C move. Requires a 127 extension of X to A. Can go as far as 1414, but cannot close beyond it. C leg is valid if that condition is met. Okay, and then last but not least, you need to know where D is. Okay, we know D is going to be down here. Let me move this out the way. That was for B. We know D is going to be down here somewhere, right? And the D leg on the Cipher is pretty simple, okay? It's basically a retracement of the entire move, X to C. Well, and that's how I taught myself it. Just look at the whole move and just run your Fibonacci retracement across X to C. So this is for your D leg completion. This is your entry, okay? All you need is 786. You don't need anything else. All right. And that's the D completion down there. Okay. And you're basically entering at D. So that's D. So your Cipher, if once price action gets to 786, you're free to enter. Or since you've projected that a Cipher pattern is on the way, you can just make a limit order. In this case, this would be a bullish advanced Cipher. Let me just go ahead and knock his legs off. Let me cross him off. Okay, what a pretty little thing. I love these things. On this bullish one, you've already written that out. Even if price hasn't got there yet, you're projecting it. You're predicting it. Identify, predict, decide, execute. Remember in the beginning lessons. So you're just going to put a buy limit order. In this case, for this is Invesco, right? QQQ. A lot of new traders are looking into companies like this, but you just put a buy limit order at 210.25. Or if you happen to be watching the chart live at market, you could just enter, because chances are you're not going to want to pass up a Cypher pattern, I promise you. Okay, so that was a bullish example. Let's flip around and let's go find a bearish example. Not fine, but let's just draw up one in the opposite direction. And then we're going to jump over to the live charts and talk about this stuff. We'll do the stops and targets, and then we'll get out of here. So same exact thing, right? Where you are identify your impulse leg. All right. That's your X to A move. Okay. Second, step number 2. How did that disappear like that? Your X to A move. Okay. Second, you see you need to validate the B leg, which is your A to B move. Okay, so you got your X to A, your impulse. Now you're coming in for your A to B move to validate B. And same thing. That's valid only if that retracement touches the 382, retracement of X to A. So I'm just going to bring on the 382. I don't need anything else. I want to keep the chart clean. Okay. So we know that's clean. We must hit the 382. Can go as far as the 618, but cannot close beyond it. Typically, you're not going to have too many problems in that area. But if you did, you understand that if a candle closes beyond 618, you probably need to leave that alone. That's not going to be a good cipher for you. Okay, so B is valid in that case. And then remember, C is going to have to exceed A, and it needs to be at least 127%, or the 127 extension. So we'll grab the extension tool, measure from X to A, come back. Okay, and then remember, must touch the 127, can go as far as the 1414, but cannot close beyond it. If it closed beyond the 1414, throw it in the trash, move on, another one's coming. But so far, so good. That would be a valid C if this is what you were dealing with. Okay, that'd be a valid C leg. And then last but not least, you would need to know where D is. So you see price action starting to move up. And at that point, when he's probably halfway, you're going to start looking and saying, hey, I'm good on X to A. I'm good on B. I got a 382B. I got a 127C. I know D is up here somewhere. Okay. And you're just going to say, where is it? Because if that cipher fills, I'm taking it. So you're going to grab your retracement tool. You're going to measure from X to C. You're going to bring on only the 786. That's all you need. Keep it clean if you can, once you get used to running your fibs. And that's D right there. That's your D leg entry. I'm going to cross that bad boy off. I'm going to show you something else real quick. So I should have brought him up here. Okay, so that's where the entry is. Cross him off. Pretty little thing. Love these things. So that's D, and that's where you're going to be entering. Okay. And the same way that I said before, you're going to know where D is because you had already put your cipher together, and you're just going to, in this case, a sell limit order at $182.63. So don't worry about the rest because we're going to get into the stops and targets. I want to do one more thing. Probably should be doing this more often. It's kind of easy to just teach with the lines because I can really go leg by leg. But what you're going to be able to do is there's a built-in, see this one with the C, and then you hover over it, it says Cipher tool. You probably want to put Cipher under your favorites if you're a TradingView user because it has the Cipher tool in it with the measurements where you can just see, you know, where your D is. If you can, maybe I'll bring that up a little bit more and then we'll get to the live charts. But I'll make this, I'll make these a little bit bigger. That's too big. Let's go 18. Okay, so you guys can see from X to A, you see the 462, right? We needed 382, that's 462. We needed 127 from X to A extension. You see the 136, so we're getting the 127 up there and not going beyond the 1414, which you can see. Okay, and then 845 here, we just need 786, so we can take this and move it to 786 on the dot. So I wanted to show you, I wanted to take a minute to show you that they actually have the built-in Cipher tool on TradingView. So now, with that being said, let's jump over to the live chart where I've already marked off some of these. So this time we're going to be looking at dollar CAD, you know, for currency pair, and it's pretty much in front of you. I have it marked off, but let's just walk through it. So grabbing the let's do it like this. Okay, identifying the impulse for this one. Okay, identifying that, and then wondering, just being curious enough to wonder, I wonder, is that 382? These are the kind of questions you want to ask yourself. So grabbing your retracement tool to find out, is that valid B? So from the low here, measuring the impulse from the low to the high, and then only bringing on 382. I'm not going to bring on 618. I don't need it on this one, okay? So you see him come wick down, so we know that's a valid B leg, okay? We know B leg is valid. I'm going to put a thumbs up on that, okay? Then wondering what's good with C up here. Wondering if C is good, because at any point when it's no longer valid, you're going to leave it alone and move on to something else. So wondering if C is a 127 extension of X to A. What happened? Wondering if C is valid. So grabbing the extension, grabbing the Fibonacci extension, measuring from X to A and coming back. And what did our rule state? Our rule said it must touch the 127. Sooner or later, you're going to start asking yourself, why do these numbers just always play out and react like that? Because the market moves harmonically and it continues to create these patterns over and over, whether you like it, hate it, understand it or not, until it becomes proof to you. So X to C, 127 extension, right on the dot. Okay. Can go as high as the 1414. But cannot close beyond it. None of that ever happened. And then we'd start looking at D. So price action could have been here, but we still would have been looking at D. So with the Fibonacci retracement tool, remember that whole side. Just think about the whole side to make it easier so that you don't lose track, so that you don't get nervous, so you don't say, what was it? It's the whole move, X to C. So from X to C, retracement, X to C. Okay. And the only thing that you need on that one is 786. Okay, so I only put on the stuff that I need. 786D is down here. Notice how I was trying to warn you guys about how this thing reacts. Notice how when it came to 382, he only went and got 382. Notice how when it came to 127, he only got 127. Notice how when it came to 786D, he only went and got 786D. Notice that? That's just, those things should stand out to you. So X, A, B, C, D is the entry. And of course, you see how he reacted, okay? And then for me, I'm not going to do the individual lines, but I am going to use the tool to mark him off for you. So I'll go from here to here, to here, to here, and here. Almost little to no drawdown, okay? So I'm kind of tired of looking at purple. Sorry, guys. Yeah, I'm a little tired of seeing purple. Okay. So, and you see the numbers in there too. So you see that 50% B, you see that 132C, and you see the 786D. All right. So that's kind of how that would look. Looking at another one. So here's this is so amazing. Remember how I said they come back to back to back, especially if you are on smaller time frames. So check this out. We're on a 10-minute time frame. 10-minute time frame for Aussie dollar. And then of course you see, of course I already have it, I have it boxed out, but we'll just go ahead and do it. We'll just run through it real fast. So starting with the impulse, low to high, and trying to see if we got 382. Okay, so from low to high, why do you think he just sat right there on it? That's why these numbers matter, right? Why do you think he just came just to 382? He didn't want anything else. He just wanted 382. The market wants these major Fibonacci ratios. Looking to see, well, let's just do it. Let's just be a little bit more consistent. So X and A. Okay. Okay, X, A, and then wondering, so X, A, we know B is good because it hit 382, and then wondering if C is good up here. So grabbing the extension and measuring from X to A and coming back. And knowing that our rule says, now this one is tight, the rule says it must touch the 127 extension. Must touch the 127 extension of X to A, and he wicks up and gets it. Why do you think that is? And then that would have been B, and that would have been a good C. And then just saying, okay, where was D going to be? Okay, and then just grabbing our retracement tool, measuring from X to C, knowing that we only need 127. I'm sorry, we only need 786 of, remember, that whole side. Okay, 786. Just notice is that, of course, he comes, wicks down into it, 10-minute chart, not too much pressure. And of course, he fires off up out of there for a killer win. A short time frame. You know, a person with the right type of account and the right type of trade and account management could really just take that one trade and be done with his day. This trader, I wasn't trading a dollar cat on that day. With these three winners I'm talking about, could have been done with his day. Seriously, that's how powerful this stuff can be. He could have taken his three trades, could have made his money and been done. But let me stop running my mouth and finish up. We'll just go ahead and grab the Cypher pattern tool, and we'll just throw this bad boy on here. Boom. Okay. So moving on to the next one that we found and carved out. Let me see. I know it's in there somewhere. Don't remember if I had a bullish or bearish one at this point. So much going on. Okay. I think is that him? Let me see. Let me just grab the tool real quick. And let me just come here. Here. Yep. Here. And here. Just advance through this one a little bit faster, okay? So if you look at this one, okay, from X to A, see that 41, we're getting the 382. From X to A extension for C, we're at 136, we needed 127, and then 786 from X to C, okay? Eyes got to be working pretty sharp to find that kind of stuff on that one, okay? Then moving along here. Okay? I'm just going to speed us up a little bit. Grab the Cipher tool. Start with this impulse here. Okay? Impulse, X to A. Come up here. We got a 45% B. 45% retracement from X to A. For B, valid B. Come drop down here. We got our 127 C. We got our 127 C. And then come up here and look for our 786. Look for our 786D, somewhere right in here. Somewhere right in there, okay? A little bit of static, not too much to handle on a 10-minute chart. I'm not going to kill anyone. But then, of course, it does roll over, okay? So let's look at one more. So that was two foreign currencies, two FX pairs. If you're wondering, even crypto, okay, even crypto. Promise you, we're not going to be here too much longer. I think you guys get the gist of it. You really wanted those 4 steps, and I gave them to you. But just moving pretty fast through this, identifying the impulse here, okay, impulse here, coming down right here. So validating that B leg right there needs to touch the 382. It's 46%. Validating C down here, it's 1408. It ain't 1414, and it's not closing beyond it. And then coming back to fill at 786 up here. Okay. And then watch Bitcoin. This is BTC USD. As you can see, Bitcoin, a little bit of static, but rolling over. Okay. And one more on here, and I think this will be our last one. Yeah, right here. There's a little tiny, nice one in here. Remember, I said these things are pretty frequent, but I would say you do have to have your eyes open. Okay, but just run through this real quick. Just go ahead and use this impulse right here. Come up. That's a valid. Oh, wrong tool. Hang on. Cipher. Okay, so starting with the impulse here. Okay, that's our impulse, X to A. Come up here, that's a valid B at 52%, must touch the 382. Okay, come down here, C, looks like we're at 138, can go as far as 1414, and then come right up here to 786. He was just in there. 70 is just in there. 786, and then you see a rollover. Okay, so those are the quick little examples that we wanted to pull out. And while we're here, just to reiterate, just to make it a little bit more clear, hopefully we're not beating a dead horse. Step 1, X to A move. Cipher begins when the market creates an impulse leg. You guys already know that this is considered to be the X to A leg. Once that initial move is identified, you look for the rest. Step 1, X to A. Step 2, the A to B move. Once you have your X to A, you're looking for price action to complete a valid B. B is valid with a 382 retracement of X to A. Okay. It's invalid if it doesn't hit 382, and it's invalid if it closes beyond 618. Okay. Step 3, B to C leg. Once you're good on the B leg, look for the C leg. The market created a valid C leg with the wick at least touching the 127, extension of X to A. Okay. This leg is invalid if it doesn't hit 127, and it's invalid if it closes beyond 1414. Okay. D leg completion. The market forms a successful D completion point, which is your entry, by fulfilling a 786 retracement of X to C. I did want to go do one more thing on this and talk about stops and targets real fast, real quick. And there's some other filters you can put in here to determine whether you're either going to take the cipher or not. You can start throwing in things like, is it overbought and is it oversold on RSI? You can throw in stuff like that. Or if you like to use indicators like volume, if there's a lot of bearish volume, let's say in this example here, if there's a lot of bearish volume in there, that's going to increase your combined technical score. So you have your pattern field, you're overbought or oversold on RSI, and you got a lot of volume. You can use those 3 things tied together to give you a little bit more confidence in the probability of your trade. Stops and targets. Targets are a retracement of C to D, but if price action is still moving up, then you need to move your targets. So, well, let me say this. Stops first. Stops are just always above X. Where you put it with Cipher, it really doesn't matter, because if he pushes up and takes you out, it just means that the Cipher got smoked, which is rare that it fails. Remember, these have a 70% success rate, which I just showed you 100% success rate on them. It's rare, but it does happen. But stops above X, okay? And then targets based off of C to D, Fibonacci retracement, C to D. So grabbing the retracement coming from C and then coming to D, but it's not going to be D because price action went up. So you need to, the retracement is based off the entire move on the C to D side, basically. Okay. And on that C to D side, you're looking for two targets, okay, on the retracement end of it. Okay, target one is a 382 retracement, okay, and target two, and this is the same as always, target two is a 618 retracement. So this one here, even though it hit both targets, a trader might not have been, he might not have been able to withstand all of this consolidated madness. Let's say if he just said, you know what, on Cipher, I'm just targeting the 618, then yes, he does get both targets. But if he can't withstand that, because once he takes half of his profit, which is good, he's probably going to end up giving it back and, being at zero and stuff like that. And now if he also rolls his stops down, he would have been taken out. So one of the ways to do it is to take half of your profit at 382 and just let the trade keep working. And then eventually, in this case here, he would have made it down to target two for the full profit. Let's look at this one here. Same thing from C to D. And I think this one's going to be the same way. So from C to D, because there's a little bit of drawdown in there, kind of throwing off the profit targets. But let me just do this over real fast. Take this box out our way too. So targets, right? Okay. Stops first below X, right? As tight as you want. It doesn't really matter, because if this price action keeps coming down and takes you out, it's really, it's one that failed or got smoked. But remember, I talked about that efficiency. They're efficient because they got room to breathe. That's what you're seeing. Enough room for it to breathe to still go do its thing. So now measuring from C to D, or to the end of the move, okay, with 382 being target one and 618 being target two, still a two target winner. The only thing is there would have been a little bit of a hassle when you made it. No, there would not have been. Price action, yeah, he did. Price action came up, wicked to 382, right? So you would have taken half of your position and then made it all the way up to target two at 618. The problem is if you had took half of your position and moved your stop like a trailing stop, if you moved your trailing stop loss right up under 382 where you took half of your position, you can see price fell back and then you would have been out. But this is up to the trader's trade management on how he's going to get to target two. Me, for Cypher pattern, because I've seen how it reacts, I'm not moving my stop. I want the trade to have room to breathe, and I'm always targeting target two. When I get to 382, yes, I will close half of my position. If it's a standard lot, I'm closing it off and I'm rolling the other 50% through. If it's a stock and I got, let's say, 10 shares, I'm closing 10 shares and I'm closing 5 of it and I'm letting the other 5 run. Okay, so you kind of want to allow this to look like this. So let's say entering here, which is you're not going to be that happy at first with that drawdown that happened, right? With stops below X, right? Probably would have scared some people. And like I said, your trade psychology has to be strong enough to withstand that. Don't close a losing trade because you're in a drawdown. If anything, just let it hit your stop. In the long run, you're not saving any money. I can promise you, you're not saving any money by closing a trade because you think you're going to lose. And this is the perfect example, because you think you're going to lose and it turned out to be a 2-target winner. Okay, so that's what I have to say on that. That's what that risk versus reward would have looked like, almost a 2-to-1. If you look at the little small one, I think we're pretty much done with the training, with the lesson. But if you look at the small one, this guy just really, really kicked butt. This one was not fair. I would have loved to have a part in this one. But again, just one more time, that whole entire move, okay, C, and then coming down to D, and then 382 target 1, 618 target 2. And using their risk versus reward tool, entering right here, target 2 right there, even though you could still take even a third of your position and keep going. Just wanted to throw that in there. It's all about your trade management. I do have a class that a lesson that I will be doing on trade management. Beautiful 2-to-1. Okay, so hope you guys enjoyed this one. I don't see too many people talking about the Cypher pattern. Remember, I said they come back to back to back. Now you know I'm not lying. Okay, so like the video if you enjoyed this lesson and this talk. Subscribe to the channel. If you're an aspiring trader or know someone who's an aspiring trader, share the video. Give me a thumbs up. I could really use your support as I continue to build this stuff out and put all this content out here. We haven't even done half of what we're going to do. But the good thing about where we are now, there's some more coming up, more advanced patterns coming up, but we've handled the three big dogs, being Bat, Garley, and Cipher. So thanks for staying with me. I appreciate your support. You guys be safe in the market, and I'll see you on the next video.